What is going on, guys? Welcome to another market update. As usual, let's get straight to the charts. So as discussed in our previous video on the Quantonomy channel, we finally had that long-awaited breakout of epic proportions after a ridiculously boring half a year of macro consolidation. We have finally cleared the 100 to 110k area with conviction after our bull flag breakout and are now in price discovery. We can definitely say that the mania phase, or the last leg of the bull market, has now begun. The only questions now are how high will we go and how fast. We can only look at historical data, and the previous peaks occurred sometime in November or December. But we like to be even more cautious by accounting for a potential 3-month window, with the average date of November 30th being in the middle of that window. So we're really looking at a potential period between mid-October to mid-January. I'm not falling for the "this time is different" hype. Almost every asset on Earth has bear markets, regardless of institutional investment, which is the justification for the "this time is different" narrative of this cycle. We have seen this pattern play out over and over again. The nice thing about Bitcoin is that the cycles have been super regular in many ways, ranging from the periodicity to their growth rate, at least so far. This is something you should cherish because it is so incredibly rare that an asset gives you this many predictable cues about its future price behavior. Of course, Bitcoin could pull the rug out from under us at any moment, but it is difficult for it to do that to a huge degree, due to physical laws governing the growth of such a mathematically controlled asset. It makes perfect intuitive sense to take advantage of the system for as long as possible, while most people still don't get what is going on. What gets most people wrecked is the more uncertain micro picture, or trying to go against Bitcoin's macro price behavior, either by misinterpreting it or being willfully ignorant. We are now in a new consolidation area after our massive pump to 123k. We could be looking at yet another bull flag in the form of a symmetrical triangle over here, taking us to the mid 130k region, but it is still a bit too early to tell. Now let's look at some other indicators and data to gain more insight into Bitcoin's current price action. Let's start with the DXY. So the dollar is finally having a little bit of a recovery over here. It's probably gonna be short-lived, however. It's completely normal for the dollar to have a little bit of a dead cat bounce over here. It can't just keep going down in one straight line. And this little bounce is also lining up with Bitcoin's consolidation. But once Bitcoin breaks to the upside again, the dollar will most likely crash again. Now let's look at the CME. So we have two gaps over here. First off, we have this little gap at, let's say, 91k or so, and the more recent larger gap at 114,000. So if you were to ask me, I would say that this gap is much more likely to be filled, but even then, it doesn't have to be filled. But if we were to fill this gap over here, I would pack my bags, because I think in that case the bull market would be over. So this is something I think we're gonna retest in the next bear market. So for example, if we were to have a little bit of a fake out to the downside from the symmetrical triangle that we're in right now, we could in theory fill this one over here, but it's, as I said, not necessary at all. It's just something to keep in mind, that there is some liquidity there as well that you're going to see soon when I'm going to show you a different chart. Just to have a complete picture, let's look at the unemployment rate as well, even though there's nothing special going on over here. It's just oscillating at the 4.1 level or so, so everything is still very good over here. We're not going to that 5% target where things could get out of hand. Next, let's look at the federal funds rate. And the good thing is that we're still at 4.33. We're at a similar point to some of these other tops over here. We're not really, accelerating to the downside right now. The important thing is that, if we can stay at these elevated levels, that means that the economy is strong enough to handle these higher interest rates. If the Fed actually decides to start cutting these rates, that would show that there is some severe weakness going on in the market, which would probably inevitably result in a recession. So let's not hope for that, okay? Right now, it's very good that we're still at these types of levels. It's funny because Trump actually wants the Fed to start cutting rates as soon as possible, and there was even some speculation going on about Jerome Powell stepping down. But that doesn't seem to be the case. Trump really doesn't like him, but he doesn't have any control over him. Now let's look at the liquidation heat map. And before getting to the recent price action, let's look at what happened after our last video. We had this massive area of liquidity over here, and the bears were desperately trying to suppress the price. And as you can see, for a while it worked. There was a little bit of consolidation below these levels over here, but then, they couldn't hold it up any longer, and Bitcoin had its massive pump to the upside. And we also have a little bit of liquidity over here, which aligns perfectly with the current CME gap, so that's something to keep in mind. And the funding rates aren't really bearish either, they're actually quite neutral over here, which shows that there's still plenty of bears waiting to get liquidated. And just recently they were even positive for the bulls, which means that you were making money if you were longing Bitcoin. That's how many bears there were. But even right now, they're completely neutral over here, which is atypical for the mania phase of the bull market, where everybody is piling in on longs. Now, let's look at some news. For our first story, we have banks integrating crypto banking into its services. Mark my words, guys, the banking shift from skepticism to service expansion is underway, with institutions like Deutsche Bank and Sparkassen now introducing Bitcoin access directly through banking apps. Crypto adoption is moving from niche to normalized. That definitely moves the mass adoption needle. In fact, Standard Chartered has become the first major global bank to establish a spot trading desk for Bitcoin and Ethereum, aimed at institutional clients through its London hub. This move marks a further step toward integrating crypto into its traditional financial services. I remember when you had to worry about banks blocking your transfers or freezing your bank account if you had anything to do with crypto, because they thought it was a scam. Then there was a period where people like Jamie Dimon and other banksters were laughing at Bitcoin, calling it names, etc. Then lawmakers were trying to kill crypto by regulating it to death. Now more and more crypto-friendly banks are starting to pop up with competing offerings to entice savvy customers. The Estonian LHV bank I use is very crypto-friendly, for example. The founders of it even made a fortune by investing in crypto. Remember Gandhi's quote, "First, they ignore you, then they laugh at you, then they fight you, then you win." Looks like we're finally at the winning part, but there's a lot more winning left to do. For our next and last piece of news, we have 3 crypto bills approved by the House in the United States, with one of them expected to be signed into law soon. Since the Genius Act, a bill aimed at regulating stablecoins, already passed by the Senate, the House vote now sends the bill to the executive branch to sign into law. Stablecoins are a type of cryptocurrency whose value is pegged to another asset, often the US dollar. The Anti-CBDC Surveillance State Acts, as well as the Digital Asset Market Clarity Act of 2025, still need to be voted on by the Senate. This isn't just another example of regulatory housekeeping, in my opinion. It's a foundational shift. These bills cut through crypto ambiguity, address privacy concerns, and set the legal stage for mass adoption if the Senate and White House follow through. It's also good that they destroyed the potential cancer in the form of a CBDC before it could ever arrive. Too bad the EU loves imposing more and more control over their people and are going full steam ahead with their own CBDC. Now, back to the charts. Let's start with the M2 money shift for Bitcoin. As you can see, Bitcoin has been moving to the upside, which is something we predicted. because we also had this little correction over here, which also perfectly lined up with the money supplies correction. Now, if we were to go to the upside again, then 135k, which is a level we talked about before, wouldn't be out of the question. And by September or October or so, we could actually reach levels like 150 or even 160k theoretically, if it's perfectly aligned with the money shift's price action, which is something it doesn't have to do, obviously, because these don't correlate linearly. When comparing Bitcoin's price action to that of the S&P, you can literally see that the price action is off the charts. So let's bring it down over here, just a notch. As you can see, both the S&P and Bitcoin have been performing spectacularly, breaking to increasingly higher highs. Let's continue with the crypto fear and greed index, which is just hovering in the 70s or so. That's just a normal greedy level over here, nothing special in the mania phase of the bull market. We should get worried, however, if we were to go to the 90s or so for extended periods of time, because that would show exhaustion. But staying at these levels here, that's actually quite normal and healthy. Next, let's look at Google Trends, and finally we have some action going on over here. It's pretty interesting because I think what we're building over here is similar to this phase of the previous market cycle, which was the beginning of the mania phase. So expect even higher levels over the course of the next few months until we reach, let's say, 90 or even 100 over here. That's when we have reached peak exhaustion. Finally, I want to talk a little bit about the altcoin market, which is blasphemy, I know, because I'm a Bitcoin maxi, but it's very useful information, and knowledge is never bad for you if you use it correctly. In this case, we are reaching a very important point over here where the altcoin market could actually be breaking to new highs over here after a multi-year consolidation period over here. We really had pretty much 1, 2, 3 highs over here, and this fourth one here could finally actually have a nice breakout. The reason why it's important to know this is actually because we typically have these altcoin seasons toward the very end of Bitcoin's bull market, because that's where we have maximum confidence in crypto assets. So all kinds of little meme coins and other altcoins can thrive in that kind of environment. And we finally had our breakdown over here. Bitcoin is starting to lose some dominance, and this process could be very fast. As you can see, the previous one was quite fast, and the previous one over here was a little bit longer, but this one could be even faster than the last one over here. It could really happen over the course of 1 or 2 months even. Look how steep this drop over here already is. And as predicted in our last video, Ethereum had its own breakout over here, a very nice one, as you can see. It's starting to move toward this resistance level over here, which is formed by the previous bottoms. And of course it could even go higher than these levels. I could really see $10,000 plus Ethereum in this cycle. That's a possibility. Finally, back to Bitcoin, and let's start with the moving averages, which is just a formality at this point because we're way above all of them. Even the 20-day moving average is way down over here. And this is very healthy behavior in the mania phase of the bull market. The situation with the weekly moving averages is looking even more bullish because we're so far away from even the 20-week moving average. And this distance between the price action and the moving averages can actually get even larger, because toward the very end of the mania phase, you can see what Bitcoin usually does. So what does the overall picture look like? Exactly as we predicted, because we were telling you for a long time over here that we didn't really have much room left to the downside anymore. We were getting awfully close to this trend line over here, which has been a meme, because we've never really had such a market cycle before where the bull market just follows a straight line, straight to the moon over here. It's just interesting to speculate on the future of this market cycle. Where will it end? Will we go to the moon over here, or will we have a slightly left translated cycle, or even a delayed cycle? I think the chances are quite high that we will reach it just in time, towards November or December or so. By the way, make sure to also join our free Telegram group. We've had a lot of new members join recently, and it's been fun getting to know all of you guys. I can also help you with all kinds of questions you may have, and the group is completely free to join, so it's a no-brainer. I will leave the link in the description. This is Saverio speaking, and as always, thanks for watching.